Hey guys, it's Max. How's everyone doing? Getting me a soda here, HEB brand, HEB sparkling water. Good stuff. How's everyone's week? I wonder if I'll remember to share the screen or if I'm going to forget like I always do. Let's see if I can remember this time. Share screen, entire screen. All right, let's look at the Ultiverse. See what's going on in Ultiland. Okay, let's do it like this. Okay, no, yep. Is that the latest chart? Gosh darn it, that is the latest chart. I cannot believe freaking NVO. I was hoping this was not the latest chart. Let's look at one other thing here. Okay, over here in the ULTY grid, somehow I don't think that's the right chart. Hang on just a second. Here's the right chart. All right, what I wanted to do, everyone to notice was, oh, gosh darn it, it's not putting the average on here. I don't know. I'll have to work that out on my own time. All right. Well, anyway, let's, as far as ULTY itself, or as far as the whole market did, the market was killing it today. We'll start with the S&P. That's a daily chart of the SPY, but you can see today's bar totally engulfed the day before's bar, and the open was lower than the day before's bar, and the close was higher than the day before's bar. That's called a bullish engulfing pattern. A lot of people think that's a bullish pattern. So some people think the sell-off is over. Some people think we still have a little bit more to go. I have been noticing this big, huge gap on the chart between these two red lines, thinking that there's buyers hiding in here waiting to buy. So that's kind of the assumption I've been making. So far, it's been true. We'll see. We'll see what happens. If we look at the NASDAQ, the Qs, their chart's even stronger. They filled two small recent gaps, but they still have the one from the election night open. So if you go by the theory that the NASDAQ's kind of leading the way, the NASDAQ's stronger than the S&P. Probably this was just a brief little pullback and it's no big deal. We shall see, though. You know, I always look at volatility as kind of a clue. And volatility on the daily bar put in a red bar today. It's still elevated, but it's starting to come back down. But if we look at the shorter time frames in volatility, it's still elevated. So we'll keep watching it. We're going to keep the system cautious for now. The trend following system is still going to stay red over the weekend. Path of least resistance, or the next big move is going to be down. I mean, I think. Who knows? Of course, I mean, at least that's what I'm going to stick with that at least until the volatility sells off more. Who knows? On Monday morning, it could be selling off like crazy. So, and we could switch this from green to red. Until I see it sell off, I'm going to stay cautious, though. Guilty till proven innocent. All right, let's look at the index buffer report. Okay, so the SPY was up 1.2 points today, it looks like. And look at SPY-T up 1.08 points. That's pretty dang good. Look at T-SPY up 1.11. That's pretty good too. Look at JEP-I, killing it, up 97 bips. Look at SPY-I up 104 bips. I-SPY up 137. For some reason, XDT was down, but I bet you they were ex-dividend and it did not get included in the price. I bet you that's wrong. I hope I'm sharing the screen. Am I sharing the screen? I'm not going to get mad if I'm not, but yeah, I am sharing the screen, right? Yeah, good. Okay. All right. I'm not going to get mad. It's all right. So look over here in, well, okay. Well, I was going to say, first of all, S-vol and Z-vol are both super sensitive to volatility. On days volatility is going down, i.e. the market's going up, they go up a lot. But on days volatility is going up, they'll outperform the market on the downside. The SPY might be down a point, and S-vol and Z-vol might be down 3 or 4 points. Anyway, they're always fun to watch. Today being a bounce back day today, S-vol is up big. S-vol shorts, just for those who don't know, really quick, S-vol shorts volatility futures. And you can see volatility futures. It was a good market to be short in today. That's 6 o'clock this morning. 6 o'clock this morning, the VIX futures were like at 22. They crushed them all the way down to 18. So that's like a 10% move in that market, right? Well, shorting volatility is a different way to be bullish on the market. It's just a different way. But anyway, it really paid off in this case for people that owned S-vol today. But we'll keep an eye on that. And Z-vol, for some reason, they switched their symbol and they aren't on my thing anymore. I need to fix that. Okay, so KQQQ, they did all right. FEPI, look at FEPI killing the NASDAQ, beating twice as good. AIPI beating the NASDAQ. If you guys have any questions, I'll take them after I stop talking about the market. Just put them in the comments. WiMAX. It seems like every day I mention the WiMAX beating the NASDAQ. Now, the NASDAQ isn't really their benchmark. It's the easiest one I can compare it to. So I guess it should make sense because YieldMax is kind of a concentrated portfolio of some of the better, some of the more high-flying NASDAQ stocks, and they're selling volatility on it, which creates an income and a buffer and also creates caps to some extent. But anyway, they just seem to be ahead of the NASDAQ, I'd say almost every day. I mean, every bullish day, they're ahead of the NASDAQ. Look at QYLD beating the NASDAQ today. RYLD is looking good. Really, everything's looking good. I mean, IWMI, everything's right up there with the parent, catching all this sweet upside. Okay, well, that's good to see. That is good to see. One of the main problems with covered call funds, Jay's talked about it on other people's shows. He's talked about it on my shows. Jay Petrocelli, the fund manager of a bunch of these funds, is after a market sells off big, lots of times you have really sharp bounce backs too. Well, traditionally covered call strategies that were totally capped, they lose money on the way down. So if you have a big sell-off like we did the other day, you lose money on the way down, and then the market bounces back so fast that you're capped out. Anyway, the solution to that is covered call spreads. That's what YieldMax has been doing. So let's see, though. I haven't checked it today. Let's see how the single stock YieldMax funds have been doing. See if we have some outperformance. And we do. It looks like AMZ almost outperformed the parent. AMD did outperform the parent. Coney outperformed the parent. AMZ, AMD, and Coney are in my model portfolio, my family portfolio. Just FYI, which is I'm glad to see. They're killing it. I don't have Aptly. I don't have GUI. I should have put some of this in, AIYY. I did put NVDY in, and look, that's killing it too. I don't have Tesla. I don't have Misty. Anyway, the ones I put in were WiMAX, NVDY, AMDY, AMZ, and whatever. It doesn't matter. I have some NASDAQ-based ones. But it was a good day for everybody. It was a good day for everybody. Look at this. Like I always say, I'll just start making an index of how many days YieldMax beats the NASDAQ. I bet it's 80% of the time. But it's hard to see anything really bad on here. Tesla's really the only thing that's pulling back. Babo's pulling back a little bit, but China's been, kind of hot lately. Let's take a look at Tesla, a Tesla chart. All right. Well, I'm going to zoom out a little bit. Is this just related to the Elon being in the news? And he's, this is probably all this sell-off's related to. And look how far above trend it is. Oh my gosh. It's a screaming buy in here, probably anywhere in here. I mean, if you're a Tesla bull, I mean, half retracements are very common. I mean, half of that, it blew the top off this freaking market at 360 was the prior high. Really, the prior high before that was like 270, but within a month, the prior high became 360. It's amazing. But anyway, 360 to 500, what is 100 and is like 100, whatever it is. A halfway retracement would be common or even or 60% retracement. We're right there now. Speaking of that, Bitcoin did the same thing. It is also so far above trend that even after a vicious pullback the past 3 days, it's just right now at its upper Bollinger Band. That's my sister freaking. That's my sister. Gosh darn it. It's just back to upper Bollinger Band. This looks like a screaming buy too, or if not now, it will be in here somewhere if it's, for Bitcoin bulls. But pretty much everything, if your name's not Tesla or Bitcoin, was just killing it today. I mean, anyway, let's see. What else can we look at? Do you guys have, if you guys have some questions, I'll take them. We can chat for a second. See what you guys are up to. All right. Hey, CSU, what's up, man? Good. Yeah, I'm glad. Today, everything was on sale. I hope it's not just a dead cat bounce. I mean, I don't think so. I think we're probably good through the end of the year because of the rebalancing effect. Or, I'm sorry, not rebalancing. The wealth effect. The market's up 20, 30%. Even boring index funds are up that much. People have that much more wealth they have to put back to work at the end of the year. It's what actually causes the Santa Claus rally. And it also, I think, can affect the first week of the next year too. But yeah, first quarter of next year, who knows? I'm hoping that we're good for the next couple of weeks. What do you guys think, though? Hey, what's up, Justin? I appreciate you being here. All right, so Justin got him some YMAX. Welcome to I'm in the YMAX club. Misty, 27.25 today. All right, yeah, hell yeah. Let's see what's going on here. Do I like SPY or XDT better? Well, let's just look. Let's do this will make some good Friday content. Let's just pull up a comparison. Let's just see how they've been doing. I'm pretty sure XDT's killing it because they're killing everything. They're even beating, SPY lots of times. So, but we'll see here. Let's see. I think I'm going to probably say XDTE. But I don't know. Let's see here. You couldn't go wrong with any of them. I mean, I think all the funds that I talk about and that are on the buffer report, for the most part, or I'd say a good 90% of them, 80 or 90% of them are good funds. I do have a few on there just because that it's not something I would buy, but I'm just watching it just to kind of, because I want to have the price. But I mean, for the most part, so I think SPY, iSPY, XDTE, and Triple QT, all great funds. All right, so but let's just see how much they've been. For some reason, my calculator thinks it's not pulling up. I think it's because I have, gosh damn it, it's like blocking. It's a freaking, I don't know. I think it's blocking it because it's a JavaScript or something. Anyway, I'm going to say right now XDTE because. I don't know. What do you guys do? You guys make your pick, XDT or SPY. I'm going to say XDT. I don't have either one. I had a chance to get one, and I got one of the Defiance ones. You guys know I like Defiance quite a bit, but I like Round Hill too. Okay, so Round Hill fumbled the calls today. What did they do? I never look at the daily trades anymore. So how active are they? I would love to. Yeah, I'm with you, Patrick, on XDT. That's my vote too. So I just assumed they came in at 8:30 and they sold whatever they needed to sell. Did they use judgment? Did they wait till 9 and try to see which way it's going or something? How did they fumble? Maybe they fumbled because they sold right at the open? I bet that's what you're going to say. But here's the problem with when you do it the way they do it. They need to sell it pretty close to the open or they aren't going to get any premium. I mean, that's the way their business model works. They let it float all night. So, they can capture whatever upside happened at night. But if they don't sell, I mean, if they waited an hour till after the open, I mean, their dividend would be shit. So anyway, but yeah, today you would have wanted them to wait and not sell the freaking thing at all. I mean, but you never know. Some days it could have also kept going down today and you would have been glad they sold right at the open. So, yeah, I mean, I hear you, Danger. I mean, I got you. It is aggravating. I used to watch the Defiance trades, but they're mechanical. They just do the same one every day. So there's really nothing to watch or whatever. I do think in Yield Max, watching those guys with Tesla and the Yield Max funds, there is a lot of strategy. And I think there is skill in those, but I think the index ones are more just mechanical. I don't really think there's as much judgment, but hey, did you guys see my interview yesterday with the guy from Granite Shares? What's his name? Will. I really like him. I forget his last name. Will Ryan from Granite Shares. Anyway, does anyone have any TSYY yet? Let's see what happened to it today. I put some of the trade. I put their trade actually into option strat, and because he made some pretty. I don't know if you guys heard the interview. He made some pretty bold claims, but I've been putting their trade into option strat, and he was acting like it didn't go down on the day the market went down. That this wasn't down as bad as the market. True. But in the 2 days since, it's made a lower low and lower high and lower close. So, I mean, I'm not saying it's just 3 days. I'm not saying anything bad about it at all. I was just shooting the breeze. Yeah, no, I hear you, Dangerous. It just sucks to lose that on the bounce back. That's, that really makes the Defiance strategy. I'm not telling anyone to buy Defiance, but I'm saying that makes the strategy of doing it the night before look smart. Or that's when that strategy does better, is when you have a huge gap down and a bounce right back. And that does happen in bull markets sometime. So I think that's just going to be the one weakness of the roundhill system is those kinds of days. It's not going to do as well, but it's going to do better on days where we gap up. And I think you could probably say there's maybe going to be more days where we gap up than where we have the crazy thing like we did today. But yeah, Norman, it's badass to be part of the club now. I was looking at my ULTY. I just have it on. I have everything on drip, and I just got some. But I couldn't believe. I mean, and I've only had it for like a month. How many shares I've already got? I mean, Anyway, it's just amazing how things. I don't know, but dripping, it goes against everything I believe because. But anyway, I'm doing it for a special. I'm doing it for a certain amount of time, and then I'm going to turn it off drip, and I'm going to start doing manual drip. Now, you guys all do manual drip, don't you? Where you just don't turn it on, wait for the money to come in, and then you decide what to put in, or do you guys do automatic drip? I just assumed a lot of you guys. I know from being on Discord with you guys that you guys do auto drip. So let me ask you this. Okay, lately I haven't been making as many videos because I've been obsessed. I mean, I've always been obsessed with this, but Tasty Trade got their back tester working, and it's so badass. I'm going to show you guys a really cool back test. So this is just, okay. This is 3 options. It's it's selling one call and buying two other calls. Anyway, it's it doesn't really matter what it is, but what I was impressed about it is, so I went, you can go back and I was more impressed. I'm trying to show you guys the Tasty. You guys need to get Tasty Trade if you don't have it. For trading, it's great. I mean, for charting and stuff, but this back tester is absolutely incredible, especially if you're into testing option strategies. Anyway, this three-legged spread is something I like to do sometimes, but what I really like, what this can let you do, is you can hit interval, and you can hit. See, right now I'm going back and I'm testing the trade war roller coaster. Now, you guys remember the first time Trump was in office, he would tweet something late at night, and then, stuff would go crazy. The market would open down. Then the market would usually shoot right back because it was usually just negotiating tactics. But anyway, I'm thinking that maybe the next Trump term might be like that. So I'm looking for strategies, tactics that might benefit from that. And of course, I'm mainly 99.9% invested in buy and hold, long-term, whatever. But I just like to look for little things, fun things I can exploit or whatever. So anyway, this all this is this doesn't even have any stock. All this person does is they sell an at the money call, okay, which leaves you open to unlimited loss on the upside. But then they take the money and they turn around and buy two out of the money calls. Anyway, it gives you a trade with the valley of death, but it gives you a trade where if the market goes up, you can make a buttload of money because it's like having a free option. It's almost like free leverage. And then in addition to that, they buy another option in the 30-day time frame. This makes it like a calendar spread. But anyway, so I said if a person did that and they just held that trade for 5 days, because this trade on purpose is trying to take advantage of vicious bounce backs, like what happened in today's market. This strategy will monetize that. Anyway, so and I can run it during COVID. Anyway, we'll just run it We'll run it this way here. But anyway, okay. So you can see the orange line is my profit loss for the strategy. This is just 3 trades a week. This one trade on Wednesday, one trade on Monday, one trade on Friday. Hold it 5 days and close it. No stop loss, easy peasy. What I love about this is look how. Do you remember the fourth quarter of 2018? The market freaking pretty much crashed. It was down like 30%. It dropped in September, and then it rallied a little bit. Then it dropped a bunch in November, and then it made a low on Christmas Eve. I remember it exactly. And then it had a vicious COVID type bounce back. But anyway, look how this strategy was up. Even the strategy made a record high in the equity, even though the market was making a record low. Anyway, this strategy monetizes volatility, especially certain types of volatility. The problem with it is you can see here later on in 2019, all the volatility went out of the market. And even though the market kept going up, the strategy was bleeding off money because it was trying to monetize volatility. Volatility never did appear. Anyway, I love these kinds of tactical things. And so I'll make some content on it if you guys like this kind of stuff. But Tasty Trade, go get Tasty Trade. It's the public service. Do you guys use Tasty Trade? I mean, yeah, I like books too. Patrick, and I'm going to give you a good book to get. Let me think about that, Patrick. There's so many out there, but let me think about that. I like books too. I've at one point or another, I've had every one of them. And there's 2 Bibles in option trading. There's one by a guy named McMillan, and there's another one by a guy named Sheldon Natenberg. Anyway, they interviewed him on Tasty Trade, and he's like the godfather. That book is the Bible. I think they make traders read it when they start, start trading. Some firms make traders read that when they're training you or whatever. I've heard. I think that's the dude's name. That's the best book, best comprehensive book on options. But it's real long and technical. There may be a better one for exactly what you're looking for. So let me think about that, Patrick. And maybe I'll even do some content on the best 3 option books or something, because I love books too, and like I said, I've read or had just about all of them. That's a good question. Yeah, Norman. So manual drip for you. So then, because that's the thing. Okay, so here's what I did. I kind of screwed up. I mean, lots of things work in my head. My family said, "Hey, we'll give you this sum of money, go allocate it." So I use my max factor. I use my top 10 things, just like I always show you guys. But then after I put it on for 2 weeks, I'm thinking, okay, well, here, I'll bring up let me see if I can bring up my portfolio without showing my family's. All right. Well, anyway, so there's the positions right there. AMD, AMZ, Coney, FEAT, NVDY, Triple QY, Sky, ULTY, YMAX. It's just a small account. If this works out, there's more where this came from. But this is like a proof of concept or whatever. You can see it's been working out great today. What I was thinking, though, is, okay, so what I was thinking is after I bought Feet, I realized I have some duplication in there, a lot of duplication, because Feet, of course, has some of it has NVDY and some of the single stocks I have. And then I also have Triple QY, and then I just have too much NASDAQ tech. So I think what I'm going to do is at the first of the year, I'm gonna up my percentage of Feet, and I'm going to take the single name yield maxes out of there. And I'm just going to rely on Feet to do it for me. Maybe leave NVDY in there, because I'm just a huge believer in NVIDIA. And I just think that's the Apple of this generation. It's like Apple was 20 years ago, the stock you had to have, or 10 years ago. I just think that. So, I mean, I might be NVDY and FEAT and that would be my NASDAQ allocation. God, I like Sky a lot also, though. But I mean, if it's really that good, it'll go into the Dorsey Ride. And then, of course, ULTY. I'm thinking about going down to about 4 funds. I'm thinking about going down to Feet, ULTY, YMAX, of course, YMAX, Feet, ULTY, YMAX. And then I'm going to probably go 20% Y triple Q, because I just to hedge out some of the downside volatility. Y triple Q, if you guys don't know, is an inverse fund related to the NASDAQ. But anyway, like yesterday, it was down $2 when Triple QY was down $3. So if you had 50% of each, it wouldn't have totally hedged it out, but it would help cut some of the downside volatility. So that's probably what I'm going to do. But you guys can put in the comments if you think I'm doing the right thing or screwing it up. I'll take suggestions. But I have a lot of time to think about it also. But anyway, so what are you talking about here, collectors? You have Triple Q, yeah, QDT and JetQ. And boy, it's hard to go wrong with JetQ. That's a great one. I wish I could get I wish I could do some comparisons. I don't know why this won't. It's not letting the freaking thing come up that does the comparison tool thingy. You guys know we use this all the time. You guys know, and I guess we can look at that. You guys know that I built my retirement simulator because of this tool right here. Well, there it is. The tool came back. So QD, what we're going to compare, QDT and let's just compare QDT and iSpy. But anyway, so my retirement simulator, it takes all the same inputs. I'm got so tired of typing this in. It's the same thing. It has the start price, the end price, and it has the dividends per share. That's all I need. From that, you can figure out, everything else. So that's how the retirement simulator got started. The one weakness in it is it can only look back at 1 year look back periods, and not year to date, but just like a year from today. So it's always a rolling look back period. But anyway, I think it's interesting, and we're going to look at it here in a second, the retirement simulator. All right, so let's see here. QDTE. So this is going from 11/7/2024. I don't know why it chose that date. I think I had that in there. let's just go from the lows. I like to see how these things recover off the lows. Let's go from the August lows. All right. Well, I mean, they both did well. I mean, hell, I mean, you know, in 4 months, QDT's up 18%, iSpy's up 12, 13%. That's insane. You know, that's absolutely insane. And these things are knocking off pretty good sized dividends. So let's just eyeball this real quick. What's 164 times 3? That's 320. 420, that's 480. We're going to call that $5. $5 on $40. The reason I multiply by 3 is because we're only about a third of the way through the year. $5 on $40 is, well, what is that? It's 20%. $5 on, no, it's 12%. And that's exactly what you'd expect. It's exactly what you expect. QDTE, on the other hand, is, you know, $6 for a third of the year. So it'd be 18 for a whole year, give or take. And it's a $40 investment. So, you know, that thing's knocking down 35%. So it's, you know, I'd say QDT. Here's what I'd say. I'd say always go with the one that has higher total return. Okay. That's unless you need more income. Lots of times, if you take the one with less total return, you get more income because the income is a sacrifice you're trading upside, right? Well, QDTE's breaking the freaking simulation right now because at first I wrote it off because it was new and I kept thinking it's just lucky but I mean, it's been out long enough that I think it has a pretty solid system, at least in a bull market. This is a bull market fund. In a bear market, the selling the next day thing is going to hurt it. And but this is set up for bull markets. Okay. So there's no doubt about that. QDT is a monster. So I would say take whichever, like I say, there's no reason to take iSpy because QDT has higher yield and higher total return. Okay, so let's get in the retirement simulator. I'm going to look real quick and see if you guys have questions, but then let's go back and let's read. We'll put those two in a retirement simulation and see how they do. This weekend, I really am going to build the 6 month. Hey, Thomas, what's up? Okay, so I want to talk to Thomas first, though. Max, you let the XPay comment get to you too much. I respond, oh, okay. Well, no, I didn't mean to come across that way. At least I didn't get mad at the computer tonight anyway. Yeah, the XPay comment, I think the guy just isn't a regular because, you know, I'm absolutely obsessed with upside, as you guys know, to the penny, and we all are, and we all look at it. So he's just not part of the club, and he thought I was throwing shade at it, and it's true. I mean, I get mad when there's people that talk about option funds that don't know what they're talking about. This guy's probably a banker or an insurance guy, maybe, who knows? And it probably is or an accountant. It probably is a little specialty that some people require, and I just don't get. But my general feeling is, let's go. I would always rather have a fund that's going to go out there and sell options to try to earn an income. Now, selling options isn't magic. It doesn't mean the market can't go down and that fund still can't lose money, but I'd at least rather have a chance. The guy that bought XPay is also, the market's still going to go down for him and he's cashing in his stock. So that was my point. I would just rather roll the dice on trying to, I just like things that are self-sustaining. That was the thing I loved more about these plans than anything else when they first happened. I looked at triple QI is something somebody, or any of these, maybe triple QI is a bad example, but I was looking at these as something somebody could invest in and live off the money pretty much forever, just like the 4% rule, and it'd be self-sustaining. Especially if you would follow some of my suggestions and reinvest some of the money, or maybe, whatever, maybe buy actual shares and whatever the underlying was. But anyway, I shouldn't have let that get to me so much. But I appreciate you for responding in the comments, Thomas. I appreciate it. Like I say, he just won in the club, but you guys are all in the club. We're obsessed with upside. I got kind of busted yesterday when I was talking to Will because his fund's not going to get any upside either. He sells these way out of the money options. Watch, I'll show you what he does. They say what they're doing. They do it on leverage Tesla. We don't have leverage Tesla in the back tester, but we'll just test it on Tesla. Tesla's pretty volatile even without being leveraged. Okay, what he's doing It's a great idea. Gets no upside, gets no NAV upside. Doesn't mean the fund can't make money or they get upside from the premium they earn, but they don't get any NAV upside. You're sacrificing all the NAV upside. So what they do is they sell a put every day, okay, on Tesla, and they're going way out of the money. Like he was saying 25% out of the money. So that's like that's like probably a 2 delta. We're going to see here. And he said they do it monthly, I think. All right. So if we did that on Tesla, let's see, 3 times a week. All right. Well, we don't need it 3 times a week because it's monthly. All right. And I'm just trying to show I'm trying to demonstrate how that gets no upside, but whenever there's a blip in the market, a strategy like that will lose a ton of money. I'm not throwing shade at, he knows what he's doing and stuff, but those far out of the money strategies, that wasn't really what I was trying to show. They just have a different profit loss graph that's real smooth enough. If you guys have ever seen THTA, that's what they do. They sacrifice all the upside, but they sell really far out of the money options, and it gives them a really smooth equity curve. But whenever there's an interruption in it, a big volatility spike, they get a crazy freaking. Check this out. I was just looking at this today. Let's see. THTA. So THTA, which is in my volatility report. You remember a few with August, and there's people that sold it and stuff. They said this wasn't what they got out, wasn't what they were in for. Because I can see that. Remember, it was down like 20% in one day. Now it snapped right back, and it snapped back where it wasn't down 20%, snapped back to just being down 10%. But then since then, it's pretty much made all its money back. That's the way these funds work that don't get any upside. They have really smooth profit loss, because they're all about the yield. It's a different type of strategy, but anyway, but he was he also didn't really know what I was talking about. I wanted to try to throw shade at this fund. It's a great fund. That's why I corrected and I said, I wasn't trying to say you weren't going to get alpha. I mean, I know the fund's going to make money. So anyway, okay, we got a first timey here. Let's see what this is. All right. First, caught you on the live. Really enjoying your conversation with Michael and Will from yesterday. Hello from Canada. Found you through Rod. Well, thank you. Welcome to the club. I appreciate it. I appreciate all you guys. I almost didn't do this live stream. But anyway, I decided to at the last minute. But I need to get busy making content. I've been having a hard time staying focused making content because I'm spending too much time in the backtester. The backtester is, and I have all these great ideas. But anyway, I think I need to, I'm going to try to focus on, I have like 3 or 4 ideas for content. Anyway, I need to focus on, but I'm not doing any of them because I'm just thinking about them. I'm going to pick one and get out some kind of good video for you guys this weekend. It's been a while since I've had some original content out that was good. Yeah. I thought my interviews were good because Mike and Will, but I really want to put out a video on building a portfolio that's, and I have a good idea for one. I just need to put it together. It's something called, I've teased it before. It's something called the Dragon Portfolio, and it's on the internet. Other people have talked about it, but I'm obsessed with it. You used to not be able to do it, but now thanks to these high yield funds, we can probably pretty much do it. So anyway, I'm going to try. That's going to be my Christmas present to you guys. I'm going to get my Dragon Portfolio video out. You guys will love it. It's a video. It's on a real intelligent white paper. Like I said, other people spoken about it. It's all over the internet. It's a guy in Austin named Christopher Cole, and he's a hedge fund guy. He's a volatility expert. And I don't know him. He's not my friend. Anyway, I'll get the video out this weekend. I promise I will. You guys will love it. I mean, I'm having a good time even thinking about it. What's going on here, Jay? So let's see. Question here. Your thoughts on the market recovery quite a bit after 12? Well, I don't know. Okay, so I always look at volatility to decide what it's going to do. When volatility is going down, it generally means people are taking off hedges. And so what I try to look at is I look at how much volatility recovered today and then look at how much the market recovered. Volatility is supposed to be the smart money leading indicator. And then I try to eyeball it. I mean, so to me, honestly, it is still a short. I mean, I could be wrong Monday, and I mean, but just volatility wise, I would wait another day and see what volatility is still too high. Now that's my mechanical system. But in my brain also, what I'm thinking is we do have this end of the year wealth effect and rebalancing and stuff. So maybe it's not. Maybe volatility was just elevated right in front of triple witching, which was today. It's option expiration, and also in front of all the Fed stuff this week. And maybe volatility will keep coming down next week and the market will keep going up. I don't know. I'm 50-50. But I'm going to say, but I'm mechanical. My mechanical system is short anytime volatility is trending up and above the 200 period moving average. So I'm going to say short. I'm going to need to see more evidence that, you know, the trending side of the market's short, but who knows? Who knows? What do you guys think? Let's see. I'll hide that. Yeah, thanks for being here, Collector. I appreciate it. 100-fold. I don't know if I've seen your name in here before. Now, Thomas knows a lot about volatility, knows more than I do. I mean, but Thomas is always telling me about skew and other things, and I really don't look at skew as much as I should. Anyway, Thomas, what is skew telling us right now? If you know, put it in the comments. I've heard it's off the charts, but anyway, okay. Thomas saying, I think the vol pop was from the Fed and it'll subside. Yeah. Okay, so here's another way to look at it. Here's something else I'll look at. So we're going to go back to the daily bars. We're going to look at previous vol pops where it closed above a daily bar on top of the Bollinger Band. What I was noticing is once it closed the bar on top of the Bollinger Band, the next close below it, or whenever you got to close back below the top Bollinger Band, that the high was in. I mean, in other words, there was an all clear signal. Like on this one, you'd be all clear right there. So that'd be kind of a late one. See, this is the SPY down here. I mean, that would actually be a late one, but it definitely was all clear. But this one right here, if you waited until it, if it gets above and then waited till the first close below, it was this bar, which was the perfect bar to buy. That's when the tide turned back to up. Same thing here. It was a little bit late. So, I don't know. We'll see. But given the surely Santa Claus won't let us down with all the money and all the I don't know. The other conspiracy type of thing is they say that fund managers and people in Wall Street are paid and they benchmark their stuff to quarterly performance. So the end of quarters, there's something called end of quarter window dressing, which I'm sure you guys have heard about. Lots of times they found a phenomenon where sometimes the market kind of goes up into the end of the quarter. But anyway, because they think it's to the extent that money managers and people are able to, they try to dress the windows up. I'm just glad I remembered to share the screen today. This has been a success, and I got you guys to look at a back test. I could talk about back test all day long. I realize some of you guys aren't interested in a back test. I will, but I'll make some video on it with some slides and stuff. And those of you that are interested can watch it. Okay, so what are you saying? Good to catch you on your live show. Thanks for your videos. You've been learning so much. Love your daily ULTY show. I'm very, yeah, you have a big bad finger, red #1. Okay, yeah. You're very biased on ULTY. All right. Well, I'm glad to hear that. Thank you for joining. Thank you for being here at the live show. Yeah, probably so 100-fold. Good point. All right. What's Thomas saying about triple witching? Had to pass for it to really start. Government close. Yeah. Well, okay, that's the other thing. Yeah, that's true. But that could be solved at the drop of a hat too, or not. I mean, anyway, I don't know. That's what else it is, but that's exactly what it is. That's the reason that the VIX of VIX, the VIVIX, is still this high. You know what I really liked about this, the VIVIX told us on the 11th. The daily VIVIX got above the 200-day moving average. Anything that's above the 200-day moving average, nothing good happens. That's my opinion. But anyway, when we're above the 200-day moving average, the SPY was still high. I can't see because I can't freaking. But anyway, it's just whatever. The SPY was at, I don't know, 605, but then the next day the SPY was at 605, and the next day the SPY and the VIX and the VIVIX kept creeping up, and I kept saying, I wonder what they know that we don't. But then I really thought it was just the numbers this week. But then also, did you guys hear? There's a VIX trader out there, and they call him 50 Cent because he trades 50 cent options. They call him a VIX, a well. And they don't know who he is. He's a retail guy, but he comes in and he buys options for 50 cents. He buys 40,000 of them. Say he'll buy 20 million and stuff. He loves VIX, and he's buying calls or call spreads. Well, last week I heard the Nigerian brothers. I don't subscribe to them, but I see them on CNBC. But one of the Nigerian brothers was talking about it, and yeah, they came in last week and bought some call spreads in the VIX that cost 50 cents. But anyway, it was a bullish bet in the VIX for March. Now, but I wonder if the VIX went up so fast. He may have cashed out the other day. I mean, I don't know if he, I wouldn't be surprised if he cashed out or cashed part of it out the other day. They were trying to say it was the fastest the VIX had gone up. That's the same thing they said last time. Now, this last time back here in August really was like the fastest the VIX had gone up other than COVID, I think, ever. But then I heard somebody spouting off that stat, and I just don't see it. I mean, then also I heard somebody say that it was the first time since 1974 the Dow's been down 10 days in a row. Okay, well, I mean, it wasn't like the greatest market sell-off in the row. I mean, because the SPY, which is the market, not the Dow, the SPY went sideways for 1, 2, 3, 4, 5, 6 days, and then basically dropped in 2 days. Anyway, but people on the news just like to make it sound so dramatic or whatever. That didn't seem like the worst drop since whenever on the Dow, and also that VIX pop. I wish I had saved the exact comment. But they were talking about this one-day VIX pop, maybe on a percentage basis. When you go from the day before, it was at 15, and it got to 28. I mean, that it was pretty vicious and pretty fast. Maybe on a one-day basis. I mean, on a one-day basis, it did more damage probably than August. I mean, nothing will ever be as damaging as freaking 2020, or it's COVID. I mean, or volatility going up as fast. It's 2020. All right, guys. Well, if you guys don't have any more questions or anything you want to talk about, I'll let you guys get out of here. And but I'm just making sure I caught everything that you guys are talking about here. I really appreciate you guys being here. Yeah, on the next week, I really don't know. I wish I could be decisive and say. I'm trying to think. If I had to say, I'd say up. I'd say up. I'd say the VIX being elevated is a false signal, and it's been or whatever. It's done. We're going up. We're going up in the end of the year. We're going up in the end of the year, and I think I even have it. I have a paper trade in here that I was too scared to do, and I don't know, not too scared, but I don't trade stocks that much. But I put on some paper trade that I thought would be good if we had a melt up in the end of the year. What was it? It was, I think, I don't know. I thought it might be in here. Oh, well. But like I say, I'll get into the simulator and make some specific option content. Those of you guys that like to talk about options, we can talk about options. All right. So what's 100-fold saying? The A on the right side of the chart will auto adjust according to each window. Didn't know if you were aware. I see moving chart. Yeah, I do move charts up and down all the time. Okay. But I do that. So, but I was aware of the auto, but sometimes when I have multiple charts, it still puts a chart. Like I was running a split screen, and in this resolution, there was something that USD was covering up the price. So I wanted to move it out of the way. Yeah, usually automatic's all right. I was just trying to move it out of the way to see what that was. But I'll try automatic. Okay, so where's the A? You say it's on the side of the screen. I think I've done it before. Maximize pane, change scale. There it is. A. Auto. Yeah, I think I've done it before. And it's great when you're just using one chart. On the two charts, I messed it up. But yeah, there you go. Thanks for the advice. Sometimes I still like to jack with it because they made it so big because of this tail. And I see that, and I just want to zoom it in a little bit more. But yeah, I get you. All right, guys. So if there's no more questions, did I finish my Coke? Yeah, I finished my drink. No, I didn't drink it at all because I've been talking. But like I say, I appreciate you guys being here. Be looking for some content this weekend. And if you guys ever need to get a hold of me, I have Gmail, maxconvexity@gmail. I also have a Facebook. Or you can just leave a comment in the latest video and I'll probably see it. All right. Anyway, Thomas, thanks for talking to that guy in the comments. Anyway, there's something I'm missing about XPay. I want to know. At the same time, I like what I like, but at the same time, I also like to know if there's something I don't know. So if I'm ever missing anything, you guys bring it to my attention. Thomas does, not shy to. He'll tell me. So anyway, I appreciate you guys. Oh, a VIX spike. No, a VIX spike. Well, that's a great question. No, a VIX spike doesn't mean the market will drop. Sometimes a VIX spike happens because the market already dropped. Occasionally, the VIX will spike as a reaction to the market dropping. However, there are times when the VIX will start to get elevated prior to the market dropping. And it's like, think of it like if you're a doctor and somebody comes to you with high blood pressure. It doesn't mean they're going to die. They have a higher chance of dying or having a heart attack or a stroke or whatever. So that's what VIX does. VIX just measures. VIX is really cool because what it's really measuring, it's called the volatility index. People call it the fear index or whatever. But what the VIX really is, it's measuring the price of options in the stock market. This is what options cost. And they have a formula, but this is what options on the S&P 500 cost. So it just lets you know how expensive the market is. That, the market, professional traders don't just trade price. They trade price, but they're also trading volatility. They're playing, 5D chess. A pro trader will make a bet not only that the market's going down, they'll also make a bet that, they'll also make a bet generally on volatility. It's called the volatility surface. They try to play it's real complex stuff, but those guys, that's what they do. So you don't just have to, when you play options, it's not just about up or down. Anyway, but you can look at the VIX, and the VIX is a 1 day. It is a glance of and that's a 30-day measure of volatility. So it's a glance of what 30-day volatility does. Here's something else what it is. Here's something else that's really cool about it. The VIX is also a statistical measure. You can take the VIX reading. So today it was 18, which is convenient. You can take a VIX reading and divide it by a number, and I believe it's 18. It's either 18 or 16. I'm going to Google it, but I think it's 18. Divided by 18, and the what you get would be 1. Okay, 1 is how far the VIX is predicting the market will move. That's the range of the S&P today is 1%, the average range. If VIX is elevated, like the other day when VIX was at 36, or 38, what is 36? It was projecting a 2% daily move in the S&P. That's what it is. VIX is a measure of how far the pros think the S&P is going to move. So what it tells you though, when you see VIX elevated, it says, hey, the pros think this thing's going to move a long way. Now it doesn't always move. That doesn't always mean they're right or whatever, but it's like, hey, people are worried. Sometimes nothing happens, and then the volatility will come down. And usually when volatility is coming down, traders will take that as an all clear signal to get long again. But lots of times when volatility starts going up, traders take that as a signal to hedge. That's kind of what I'm going at with volatility spikes. But here's the other thing. Here's the hardest thing about the whole deal is, okay, even if a volatility spike does tell you, hey, this thing's getting ready to drop, here's the catch. You have to pay whatever the volatility is how much options cost. So if you haven't hedged yet and volatility's already spiked, you're paying the higher price. If you hedge today, that means you're paying this price. You want to try to buy low and sell high. That's why I put the Bollinger Bands on here, and we'll have more content. But whenever you get a daily VIX down here touching the lower Bollinger Band, a lot of people would use that as a time to hedge for the downside. But VIX is a little complicated because when it goes up, it makes the market go down. VIX isn't the most, VIX is kind of not the most interesting thing, and it's kind of complicated, and I don't fully understand it, but I'm fascinated with it. And anyway, if you guys, whatever you guys know about it, tell me, and then we'll both know. I've read a bunch of books on it, watched a bunch of podcasts, but other than that, I've traded it a bunch, but I never did that well at trading it. I like trading UVXY better, which is based on volatility, but anyway, that's always what I've had better luck with. So the high bid, yeah. So no, to answer the question, not necessarily. It means it could drop. All right. So what are you saying here? Do you know why QDT barely moved? Okay. I don't know. I saw that too. I figured maybe they paid a dividend, and sometimes the charting services don't forget to add the dividend back in there. And I was figuring they weren't really down that much, but were they really down that much? I'm not a big round hill expert. So it's got to be a bad print. They were capped out. I guess it's possible. The market saw what happened, and the traders just punished their stock because they said these guys are going to do bad today. It's still a good stock anyway, even if that's what it is. It's one day. Day in and day out, that stock's kicking other stocks' ass. I wouldn't worry about it. But yeah, that was, like I say, I would kind of think it's probably a bad quote would be my first thing, that maybe they didn't factor in the dividend or whatever. But yeah, so Yield Max, yeah, was up 1.8% today. Yeah, well, QDT, it's just one day. I'm not trying to be unsympathetic. I'm just saying I don't think it's going to turn into a trend. It's one day, and they do great most other days. So most days we're talking about, man, they're beating iSpy and they're beating Defiance so bad, and and then when we pull up comparisons, they're beating the SPY. In some time frame. So I just don't think there's anything to worry about, but I'll keep an eye on QDT, and I'll damn sure be the first one to talk about it if there is. Yeah. So, okay. Every time you see a VIX spike, yeah. If you could predict the VIX spike, sure, because you could buy those. That's what that 50-cent guy does. He has a lot of money. He spends 50 cents on call options, which aren't that much. He'll buy them. And then if the VIX does spike, he'll make, multiples of that. So yeah, QDTE fell 4% since yesterday. Let me look at it. I'll probably look at what it's done for the month or for the week or something, try to get a longer time frame to take out any and see if there's a problem with it. But yeah, I'll take a look at it. Hey, yeah, I appreciate you being here. So what's your name? Brazuka, that's a good one. J Pandy, 100-fold. Well, I like this because I got some new people in here, but I like my old people too, like Thomas And I don't know where Retired Cop is, but he may be busy today. Kind of surprised Thomas isn't fishing, although it's after dark on the East Coast, so he's in from fishing. So, all right, guys. Well, I really appreciate you for being here, and thanks for asking me questions, especially about the VIX. I'd love to answer questions about volatility and the VIX. Health and wealth. What is going on? You got here a little late today. You got a real quick question? Where were you? All right. So I'll call you JJ, or just JJ's fine. Okay. Okay. Yeah, of course. I didn't see that. Of course. JJ. Okay. So the only reason you bought into it this week was you got sucked into the big year-end dividend payment. Well, I mean, all I know is you're fine. That thing is built for, as long as the market, especially as long as we're in a bull market, that thing is built for speed. That's probably the best, probably the best index-based NASDAQ fund out there. I mean, I'm going to do a fund of the year, and it's going to definitely be it's definitely a finalist, probably the winner, to be honest. I mean, in the NASDAQ category. I'll do all the comparisons to make sure I can justify it money-wise. But if you look at risk-adjusted reward, it's killing it. And you know who else is killing it is ULTY. If you only look since August, they got caught bag holding a few stocks before August. But if you can go since August, since the August lows, ULTY is also breaking all the metrics and outperforming things, and at the same time out yielding stuff. It's also out returning. So that's not normal. But anyway, it won't go on forever. So, okay, JJ, what's going on? Downward price movement pretty much net neutralized that payment. Yeah, okay, but it neutralized the payment, but give it 6 months and a year, and you'll be so many payments ahead. They keep throwing that payment every week. I mean, it has to, you have to give it some time. But yeah, it sucks that it sucks that it basically cost you the payment. There'll be days when you get extra upside, because there'll be days when it gaps open big at nighttime and they don't sell it till the next morning. And this one will be up 1.5 points, and Defiance will only be up, 0.5 point, and all the other ones only be up 0.5 point. You'll make it up somewhere. That's all I'm saying. And I'm no Round Hill fanboy. I'm always accused of being a Defiance fanboy, but that's just because Jay was the first guy that gave me an interview. If I would have got the interview at Round Hill, I'd be Round Hill, whatever. Not really, but the Defiance people are really nice. They've been good to you guys also, and good to the whole community, the Defiance and Yield Next folks. But yeah, Round Hill has some really good funds, and I like some of their ideas, and they have some of the best tickers out there too. They have some great tickers. But yeah, it's hard to argue with QDTE and XDT's performance. I haven't even checked RDTE, but I'm sure it's pretty good too. All right, guys, have a good one. I'll talk to you later.